Hi guys, this is Nathan from Winner's Edge Trading, and I actually have an interesting trade situation here that I wanted to record and show you um, because it's a little bit unique. So I have right now the Euro Dollar 1 hour chart up, and what's going on right now is obviously the Euro Dollar has moved into a downtrend and broke out of that 1.3 level that we talked about before, and it has a lot of bearish momentum. And I'm actually short on the euro dollar based on a weekly break. So I'm up pretty good on my euro short, have some positive equity, and I'm planning on holding that for a good bit of time. But as that euro short is generating money on the long-term downswing, I don't want to lose money and lose time as it bounces up and down. So what I'm doing here is I'm thinking about taking a long entry right now. And the idea is simply just to get a few pips out of the long entry and then hope for a continuation of the downtrend after the bounce, so that I am increasing my profit potential as the downtrend continues. Because I don't want to hold on to euro dollar short as it bounces 80 pips or something and not be able to take any money from that. So what I have right now is a double bottom or a tweezer bottom, however you want to look at it, and it's obviously overextended. I have Bollinger Band up here because I like to use that just to see if price is overextended and ready for a pop, which in this case it definitely is. And I think that this double bottom is a pretty good signal that we're going to get a pop. And the way I'm going to trade this is pretty simple. I'm just going to wait for the close of the candle, which is just in a few minutes. I'm going to take a buy entry here, and my stop loss is going to be below these two bottoms, as I mentioned, and I'm going to look for a pop. And so what I'll be doing is I'll be looking to move my stop up to break even to make sure that if it does turn and continues down, that I'm making money on my short and I'm not losing any money on my buy. So I'll move up my stop to break even as quickly as possible, and I'll just be targeting back up into the middle of this Bollinger Band. Like, this is the 20 moving average. If price comes back and hits the 20 moving average, I'll definitely have myself to break even by then, and I'll be looking to take profit. If it turns at all, I'll go ahead and take my profit. But if it does, for some reason, continue to bounce with a little bit more momentum than I'm expecting, I'm going to use the SAR, which are these dots, to trail my stop. And so what I'll do is, for instance, if I would have taken a short here, I would just, each time a dot is moved, I would trail my stop behind it. And so what that would do is it would give me enough room so that I'm not getting stopped out on any little bounce, but it would also keep it tight enough so that I don't get hurt really bad in a reversal. So that's just the idea of the SAR, to make sure that I am um, having a good range of trailing my stop, because you never know how far something would pop. So that's the plan here. And this whole video is a piece of crap and down the drain because the bar just changed in the last 3 minutes of the candle, and now I'm not going to take an entry.
You thought it was going to cost that?
I mean, it was completely bullish. It was all the way up here 2 seconds ago.
Oh, well.
That's annoying.